Just a quick question. How many of you were at my talk earlier? Just so I don't repeat too much of the same stuff. Okay, just a few of you. It was really busy there. It's my first time in Moscow, and I'm really enjoying myself. I feel like Christmas has arrived now after coming here from Hong Kong, where I live. For those of you that don't know me, just a brief introduction. So I worked in investment banking. I spent a couple of years as a market maker, then I was doing IPOs, and I left in 2006 to work on systemic risk in banking. A very geeky subject, but because I was talking about that at the time, I was very fortunate to be invited to speak at the very first Bitcoin conference in the world. This was Prague. The price of Bitcoin was $3. That was my first Bitcoin I purchased. There was about 30 people in the room at the time. There was 20 computer scientists and 10 die-hard activists. Been involved in the market since and investing. And today I'd like to talk to you about some of the things I've learned. Oh, the slide's gone a bit funny. Okay. We'll see if we can go through that anyway. Do we have a slide changer? Okay. All right, we'll go through it anyway. So for those of you that were at the presentation earlier, I discussed about these 5 investment waves. The first investment wave, let's see if this comes out okay. Okay, here we go. These are the 5 investment waves we've experienced since that first conference in 2011. The thing that got me into Bitcoin was the fact that it was a hedge against bank deposits. So I'm not a tech guy, I'm a finance guy. My original book, the book that I wrote, Bank to the Future, was the first book in the world that covered Bitcoin. And I talked about these 3 differences, and that was that with bank deposits, they become the legal owner of your money. And with Bitcoin, it gave you the first opportunity to be the legal owner of your digital money. The second is, with bank deposits, they spend your money as they wish. With Bitcoin, it created a peer-to-peer payment network where you get to direct the flow of your money. The third trend is the monetary policy. Bitcoin was designed around a deflationary monetary policy, where if the demand goes up, your purchasing power increases over time. And traditional money is based upon inflationary, whereby they try to create stable value, which means that your savings go down in value over time in terms of your purchasing power. That was the theses that drove us in those very early days, and that was the first presentation I gave. And these 5 different trends that I'll talk about were, firstly, there was Bitcoin. So Bitcoin was like the first wave. In 2011, it was very unclear whether it was going to succeed. It was very much a social economic experiment. And a bunch of missionaries that really believed that this was going to change the world. I think it's very close to being there now. The second thing came the altcoin, the equity wave. So I'm an investor in approximately 100 different companies in the Bitcoin and blockchain sector. Some of the more successful ones were Bitfinex, Bitstamp, Kraken, Shapeshift, BitPay, and UnoCoin, BitPayzer, and approximately 100 different companies in the sector. When I first discovered Bitcoin and started investing in that, I believed that this could be really, really impactful, so started investing in many of the companies. We created BnkToTheFuture.com. At the time, it was mainly centered around online investing, and then because our Bitcoin portfolio performed incredibly well, we decided to use it just to support the Bitcoin and blockchain economy. And so we were investing before VCs were interested in investing, before blockchain was cool, before Bitcoin was something that you told people about proudly. We managed to accumulate some really strong equity positions, which I'll tell you about how that ties in with what we're doing next. Then a load of people started copying Bitcoin and said, well, we could create a privacy coin, we could create a governance, better governance, we could create better scalability. None of them really did it, but they all created niches and separate versions of the coins, and that created a third investment wave. The equity wasn't very valuable at this time, but now we've got approximately 3 to 4 unicorns in that portfolio. Then came the first ICOs that we started investing in. So the first one I invested in was one called Mastercoin. And Mastercoin was essentially trying to turn Bitcoin into what Ethereum later became. And then from Mastercoin came some of the other ones we were investing in, like MadeSafe, which was trying to build a decentralized internet, basically, and Storage, which was a very early one. At that time, it was if you raised about $500,000, it was like this incredible achievement that was extremely celebratory. But then we invested in the big one, which was Ethereum, and Ethereum produced Google-like returns if you invested in the seed round, and many of the other ones that we invested in that didn't succeed, that you don't hear too much about today. The interesting thing about this sector is people talk about 99% failing. There are die-hard scams that still trade and still have a market. People will speculate on these things forever. These tokens never die. These cryptocurrencies never actually die. And you see the scammiest, most awful, crappiest token that has no purpose whatsoever, and people are still using those to create pumps and dumps and all sorts of stuff. So the interesting thing is it's not like the world of companies. There's not a clear failure, because even when they leave the project, it still exists. And so that's a really interesting difference and a dynamic, and that's why the market gets bigger and bigger and bigger and bigger, because these things, you can try your hardest to kill these things, but they never die. And so, we then had the wave of ICOs and tokens, and this year it just kicked off into beyond anything we could ever handle and control. So in the prior years, we knew every single deal in the sector. Now at BnkToTheFuture.com, we get 30 applications a day. It's growing at a rate that we just can't keep up with. We were niche to fintech. We wanted, I had the original book that I wrote is that it had a very simple philosophy. We believed that the future of finance was going to look very different from the past, and we didn't know which companies were going to succeed, so we wanted to invest in them all. So we created a platform that allowed VCs to invest, and then we co-invest with them, and then we'd allow our members to co-invest on the same terms that we were getting and the VCs were getting. This year, when tokens really started to become disruptive to equity, a lot of the companies that we were investing in all started planning their token and ICO strategies. A lot of the companies didn't want to sell equity anymore. They just didn't want to go through that process. And then the investors were demanding more liquidity and the ability to actually exit their positions, because a lot of our equity is illiquid. But then this ICO wave happened, and the rest is history. We've had some great presentations earlier on the impacts it's been having. The fifth wave was an unexpected wave of, an unexpected surprise. Many people talk about how, Bitcoin had this split and the community's in chaos. Well, the way that I look at it is we received, this year alone, I've received approximately 50% dividend yield just for owning Bitcoin. You just sit there, you hold your Bitcoin, and suddenly this new coin pops up, and you get it for free. And so that's acting more like a crypto dividend, you could call it, whereby a reward for just holding that crypto is that if someone has a new version and somebody wants to take the development in a different direction, then you get coins as a reward just for holding them. And so this waves of is kind of what we experienced, and for me it was just completely unexpected. When I went to that first Bitcoin conference in the world, as I said, it was 30 people in what looked like a crack den in Prague. I think I paid, I really need to research this, but I was with my wife, and I think I paid half a Bitcoin for a Snickers bar. They had this little paper wallet thing and everything, and it was really interesting experience that. And so these were the investment waves that I talked about in the earlier presentation. So you had Bitcoin, then you had equity, then you had altcoins, then you had ICOs and tokens, then you had hard forks. And what we're looking at right now is what I'd like to explore with you is what we're actually doing next before I take some of your questions. It was interesting in the last presentation that they talked about the second highest performing ICO was actually equity. The reason I find that interesting is because at the moment there's no market for that equity to actually trade. And for the last 7 years, we've been working on the licenses to do exactly that. So we are a Cayman Island securities business, and we also own a US broker-dealer and a US alternative trading system to allow for the trading of private securities online. We also were involved, that ATS was also involved in putting the first public security on the blockchain and got SEC approval in order to actually put that public stock on the blockchain. And so now we've been working on what we're very proud to be launching in 2018 is the ability to tokenize all of this equity. So here's a little snapshot of our portfolio. We've got, we own stock in some of the most valuable companies in the sector. When ICOs really started becoming disruptive to equity, we started looking at, we were purchasing more and more in tokens, but we knew that the regulations were going to come back around and were going to come full circle. So while we were investing in those tokens and the ICO boom, we also knew that we were going to have to put together the licenses so that when these ICOs do become regulated, we have the infrastructure to continue on this momentum that now we're at $400 billion a market cap, can take it through to $1 trillion and beyond. And so the way that we actually structured all of our deals is that we actually are the shareholder, the institutional shareholder, but we syndicate it with our investors through the platform, which means that we have the ability to tokenize some of the most valuable companies in the sector. So to give you an example, Bitfinex, when they first did the round with us, it was post-hack, it was a recovery for their hack, and our investors invested at about $80 million valuation depending on the price that they purchased those tokens in order to purchase the stock. It's currently now worth over $2 billion. It's paid over 100% dividend yield this year alone. We're very excited about making them one of the first companies that we actually can tokenize and people can actually trade equity. So while utility tokens, to me, are completely game-changing, they're completely revolutionary in so many ways, in that you need to completely change the law in order to prove that these aren't securities, because many of them are actually genuine utility tokens. We're also seeing hundreds and hundreds and hundreds of violations of securities law where people are trying to pretend that it's not a security when people are investing and it's just a utility. So what we want to do as this market evolves, we want to be able to take that out of the, people don't have to pretend that they're not a security anymore. And rather than actually the banks coming along and the traditional financial institutions, we've got a good history as Bitcoiners in both traditional and a team that's been there from very, very early on, investing in many of the companies that are now shaping and moving this sector to $1 trillion and beyond with both equity and that. So what I want to do is, so that's something we're really excited about. I just wanted to give you, well, I've put 4 layers here. I think we've got 5 layers of some of the things that we look for when listing a deal. As I said, we get about 30 applications a day at BnkToTheFuture.com. And unfortunately, we have to reject 95% of them. We have a 5% acceptance rate. And these are some of the type of things that we're looking for. First thing is, I believe ICOs, there's going to be 4 different types of ICOs in the future. The first one is going to be fully decentralized, fully anonymous, and completely illegal. An example of that is BTCE exchange deciding that they would create a token in order to replace the money that the FBI had seized from the exchange. And we're going to see this, really, just like the early days of Bitcoin. We're going to see these decentralized, completely, fully anonymous ICOs circumventing laws, regulations all around the world. The second type we're going to see is what we've seen a wave of this year, which is entrepreneurs coming up with seeing the amount of money in ICOs and then saying, well, what can we decentralize in order to try and get some ICO money? And that's what you've seen a lot of this year. People that are just new to the market, just coming along and saying, well, let's just take that business, let's decentralize it, and then we can get a load of money in through the ICO. I don't think there's a future in those, but we've got to kind of wave it out through the bubble. The third type is actually funding things that never had a business model in the first place. So Bitcoin's an example of that. You know, the example I like to give, Tim Berners-Lee, who invented the World Wide Web, imagine if it was possible that he could have actually tokenized when he actually created the World Wide Web, and this token actually gave people the ability to kind of participate in the network. And as the technology of the World Wide Web got adoption, then the value of that token started to move in line with its adoption. Instead, that didn't happen. Google, Facebook, and all these other companies became the mega billionaire companies that built on top of the technology that didn't have a token. So protocols that actually don't have a business model. You know, Bitcoin could not have pitched to a VC. Satoshi Nakamoto had no pitch. But now this new protocol model is bringing funding into technology that can change the world, and all the people that adopt it early are actually the beneficiaries as it builds a network effect, which is actually a completely game-changing concept in itself. The fourth type is established companies that already have customers, that already have products, that now want to align their interests with their customers, their shareholders, their stakeholders, all of the team, and they do that through a token whereby they can incentive and put everyone's interests in aligned. These are the areas that I think tokens are going to have the biggest impact. We're established companies. You're going to have completely, fully illegal ones. I think the people trying to, you know, fit in, people are going to get wiser and wiser about the people just coming up with ideas, saying, I'll decentralize this and do a pre-sale. And so these are the areas I think. So what are we looking for? Well, the first thing is someone comes along, they apply on Bank to the Future. The first thing we're looking for is these three things, really. We want a team. It doesn't necessarily mean that you need to have, but the team is, if you are doing something in, you know, one of the challenges that came to us is we really knew the fintech, we knew all the people in the industry, but then suddenly blockchain just brought every vertical in, and we weren't experts in healthcare on the blockchain or biotech or any of these areas. So we had these immense challenges of how to assess these things when we were niche experts in the area of fintech and Bitcoin and blockchain. So what we're looking for is team that have, you know, real background in the area that they're looking to do disruption in. And then we're looking for some advisor that's willing to lend their credibility that really has been around the Bitcoin blockchain space for a while. And we think that's important because I believe that many of the people that come to blockchain right now think it can do things that it just simply can't do. And so we like to see someone that's kind of been around the block, battle tested, knows that blockchain is extremely inefficient, expensive technology, and doesn't think it is cheap and all these things that people pitch it as. It's actually very expensive, very clunky, very horrible user experience, but it actually changes the world in many ways because it takes out censorship. I mean, it allows you to take out you know, areas that have censorship. But people are confusing that with databases now and banks and all these large companies thinking that they're building blockchains when really they're just building databases. And suddenly the CEO is interested in the thing that the CTO would have been interested in before. So we're looking for a team that's got someone around the block, traction, and economics is really important. So we spent a lot of time studying token economics, and some of the things that were in the previous presentations are really interested and confirm some of those points. When we launched our token, which we're just in the pre-sale at the moment, we made sure that the token economics make sense. We were in a fortunate enough position where we could do no bonuses, no discounts, and every single person pays the exact same price. We also undervalued. Our company is actually worth more than the total implied valuation when we do this, because to us, raising, you know, selling tokens was not the definition of success. The definition of success was that all parties are aligned and we all create an incredible network, and that works out as very lucrative rather than trying to dump after a 70% discount and this bonus. And essentially bonuses, discounts, and all these things are screwing up the market, because what's happening is the VCs are negotiating those discounts. Those are being sold to the retailer paying the price, and then the incentives are completely skewed because some of these VC funds have suddenly become hedge funds with a 4-month horizon to get out as soon as it hits the market. And so all of these things are going to have to evolve as we get better and better at these economics. So I'm just going to go through the others really quickly. We like to see blockchain investors. We like to see other people that have invested. We like to see someone that's been through kind of, I remember in one of the earlier talks, they talked about if you can get venture capital funding, you shouldn't be doing an ICO. I completely disagree with that. I believe that if you are the type of person that can get VC funding, then you might be someone that's responsible enough to deliver upon the tokenization and promise that come from that as well. We have to put people through the due diligence process before they list on our platform. If they're taking on US investors, they have to go through our broker-dealer due diligence. So they've been through application due diligence. They've been through maybe some blockchain investor, someone that's been around the block, so to speak, pardon the pun. And then we put them through some traditional diligence where we fact-check everything that they say as factually accurate. Once they've been through that, we then put them through the forum due diligence. So we've got 45,000 accredited investors that have been investing in Bitcoin blockchain companies. The average investor has got a portfolio of 14 different companies in the industry that they've invested through our platform. Once they hit the forum, you tend to get a real diverse array of technicians, investors, finance people, ask those questions, and once they go through those questions, you go through kind of the forum diligence. The next phase of what we're doing, I talked about we're launching the BF token, and we're experimenting now with whether we could use a token purely to improve the due diligence process. We're looking at engaging the community in taking some of the processes that we've been doing to list deals and making it less centralized and engaging more of the community in that process. We're looking at rewarding the companies for when they actually provide timely investor updates. So at the moment, it's a bit of a pain in the arse providing your updates. But if you can be incentivized in a way where good updates produce that, we think tokens can really be integrated into the Bank to the Future platform. And so we're really experimenting with that right now. Some lessons that we learned was, as we said, no bonus, no discounts, oversubscribed in the pre-sale. We got $100 million worth of subscription, but we only want $33 million to sell. The way that I think about that is many people, when they're selling their tokens, you should probably think about it more like equity. When you're selling your seed round, you don't sell as many tokens as you can, because if you are actually thinking about building something valuable, that's the cheapest equity you'll ever sell. It's why people only raise like $250,000 in the seed round, because they've got to give so much of the company away in order to do it. And then they can sell them more expensively, and if the company's progressing, they sell more expensively. That's why when we structured our token, I'm going to finish now, is that we made sure that we're sat on the balance sheet with a 2-year lock-in. We can't touch those tokens. We don't need the funding. We're not doing it for funding. We're doing it to build a network here. We completely align those interests. And so we don't want to sell $100 million worth of tokens. We only want to sell $33 million because we believe these will be the cheapest tokens we'll ever sell. And so if you believe in the value that you're creating, then you should align your model accordingly, which is something that we've been working on. And then finally, we're looking at, so there's my Twitter if anyone wants to tweet me or ask me any further questions after this. But finally, we're looking at, now we've got this due diligence model and this ability for a token to actually be rewarded to produce better diligence. We're looking at taking all of those companies that have been doing really well and creating the first equity tokenized market whereby you can now have deep liquidity if we get our way when investing in private equity and venture capital. The challenge with everyone that's done that to date is that they've tried to list it on a cryptocurrency exchange. And to list it on a cryptocurrency exchange, if it is a security, you need to have a securities license. But fortunately, we've been spending the last 7 years accumulating those licenses and getting everything ready for this. So we're very excited about that. I don't know how much time I've taken, but if we've got time for a few questions.
Okay, we have one question from our app. In your opinion, what is the most perspective altcoin?
The most what? App coin?
Most perspective in the future.
The most disruptive app coin. It's really, really hard to say, and I'll give a bit of a cop-out answer, but my job, I believe, is diversification. We want to invest in as many great teams, and the reason I say this is because great teams take a really stupid idea and eventually turn it into something great. When someone's got a really great idea but a bad team, they tend to move on, and you get all these teams that are kind of jumping around from ICO to ICO to ICO. We want someone that's on a mission. We want someone that's doing this. So when I was listening to a lot of the presentations earlier, I'm just hunting out the people that are committed to what they're doing. The story makes sense. And then even if their app, their original version, the original version of Bank to the Future was nothing like it looks now, they'll stick to that mission, they'll stick to it, they'll figure out what the customer wants, and no matter what, they'll stay focused on that. I like to see focused people where their stories make sense. They're not jumping from company to company. I dislike the serial entrepreneurs. I like ones that are on a mission to do something. And those people will turn any app and figure out what their customers want, adjust as they learn more. But there's so many great ideas at the moment, but it's this teams and execution that we need.
Thanks, Simon.
Okay.
Please applause, yes.